Good evening, my name is James Crabtree and welcome to the third in the series of the Lee Kuan Yew School's special Asian Thinker debates and discussions about coping with the world during and in the aftermath of COVID-19. This evening, we're discussing the future of trade and globalization. This crisis has called into question the very nature of globalization while also precipitating arguably the largest crisis in our global trading system and in our Asian trading system in the last century. The drops in trade that we've seen over recent weeks and months have been larger than those that we saw after the global financial crisis. And this has led many experts to predict that globalization itself, a process that once seemed inevitable, is now going to be driven into reverse. So today, to discuss this, I have an all-star panel, all here in Singapore, but all trade and globalization experts in their own right. So to kick off our discussion from our home team at the Lee Kuan Yew School will be Professor Razeen Sally, author most recently of a splendid book about Sri Lanka called Return to Sri Lanka, Travels in a Paradoxical Island, but for these purposes a noted expert on trade policy. Secondly, Parag Khanna, author most recently of The Future is Asian and founder of the consultancy Future Map and a noted observer of globalization in all of its forms. And then finally, Dr. Rebecca Maria, the Executive Director of APAC here in Singapore, the organization that brings together countries from around the Asia-Pacific region to try and improve trade and economic cooperation. Our event this evening is brought not just by the Lee Kuan Yew School, but our Center for Asia and Globalization, an internal research center at the school. And it also takes part in our Hong Soo Ching series of lectures, seminars, and public discussions. The Hong Soo Ching series is funded by a generous gift from Mr. Tay Liam Wee, the former CEO and Group Managing Director of Sincere Watch. And this event and the series as a whole is named in honor of Mr. Tay's late mother, Madam Hong Soo Ching. Apart from that, this series holds an annual lecture and sponsors seminars and conferences on various topics of global significance. So we're very grateful for them for funding these events. So the order of play this evening is each of our speakers is going to talk for no more than 5 minutes, giving their own perspective on the future of trade and globalization during and in the aftermath of COVID-19. And then we will have a period of discussion. Those of you watching, please do leave questions in the chat function on Facebook Live. We will collate these and we'll go through as many of them as possible after our guests have made their opening remarks. So with that, let me turn first to Razeen. Razeen, can you give us your outlook on trade, globalization, and protectionism in the age of COVID? Thank you.
Hello, James, and hello, everybody. I'll start with a bit of historical context with three points. First is whenever we've had a combination of intense trade, intense travel, and intense urbanization, in other words, the city phenomenon, the chances are there for pandemics to emerge and spread around the world. We've seen that before. We're seeing it now. Second point is, of course, pandemics in the past, like this one, have had huge health and economic costs, but they also tend to drive longer lasting changes in domestic politics, economics, and society, and in international relations, in global politics and global economics, beyond the immediate pandemic crisis. Third point really is about how this crisis compares with others, with markets and globalization in mind, pandemics, that is. This pandemic is different from ones in the past because it's spreading much faster, and that's because of markets and globalization. And this is the positive lesson, this pandemic is different from previous pandemics because thanks to markets and globalization, the costs of it are going to be lower, and markets and globalization will be central to coming out of the pandemic for economic recovery in the short term and beyond once we have near universal access to a vaccine. So much for the historical context. Let me turn to the short-term outlook. By that, I mean what we're likely to see on trade and globalization this side of the availability of a vaccine. Well, as you mentioned in your introductory remarks, James, the world has entered a new era, at least in the short term, of deglobalization. It's the biggest deglobalization that we've seen since the Second World War, possibly since the Great Depression. It's going to be much bigger than the contraction we saw in the immediate aftermath of the global financial crisis. So then we saw trade contract by about 10% in the space of a year. This time it's likely to be much bigger than that. And we're likely to see similar contractions in foreign direct investment and remittances, the different channels of globalization. I think this time around it's going to be different from the GFC in two major respects. First, sectorally, and second, geographically. Sectorally, the contraction of trade that came in the wake of the GFC was very much about manufacturing. And much of services, putting financial services to one side, was pretty resilient. And the real stars were travel and tourism. This time around, of course, it's travel and tourism that are being hit hardest. So we see a broad swathe of services that are contracting at least as much as manufacturing, if not more. Secondly, geographically, the global financial crisis last time around was very much a Western crisis, with much more muted effects outside the West, China and India growing healthily, for example. This time around, of course, it's everywhere, with severe contractions forecast in countries outside the West, and that's going to have a ramifying effect on trade. We're likely to see the slowdown in overall economic activity and trade and foreign direct investment and remittances lasting into next year, probably, given that we're unlikely to see some sort of U-shaped or V-shaped recovery. Finally, protectionism is increasing. It increased before this pandemic crisis, and we see with medical equipment and other things that it's rising. Some of it will be a spillover of the new domestic interventions. Finally, in my remaining minute, let me very quickly flag what I think might be some of the patterns of trade and globalization beyond the pandemic, the other side of a vaccine, as it were. Two very important historical lessons again. Firstly, a negative one. If we have protectionism in the wake of a crisis, it's going to make matters worse, not just economically, but politically and geopolitically. That's the lesson of the Great Depression in the 1930s. The positive lesson is that to come out of a crisis, we really do need reopen channels of trade and globalization in the framework of international cooperation and multilateral rules. That's the lesson post-1945. My fear, as a realist with a capital R, as it were, is that the world and its decision makers are not going to learn those lessons this time around and will do something different. I think I've run out of my 5 minutes, so I don't have time to list the ways in which I think it's going to be different, but perhaps I can come back to that in discussion. Maybe end with a little silver lining.
Very good. Okay, thank you, Rosine. Well, I'll come back to you. I'll come back to you on that. That was a very tempting thing to end on. So, Parag, let's turn over to you for your starter for 5. You've been quite prominent over recent weeks talking about the rise of a new form of regionalism, regionalization as the new globalization. Maybe unpack this a little bit for us and tell us how things look from your side.
Thank you very much, James, and that was very tantalizing, Rosine. So you left us in suspense. So look forward to your concluding those thoughts. Again, thank you again. This regionalism, regionalization as the new globalization, let's remember, really does predate the pandemic. And certainly we can think back to the trade war, which seems like ancient history, even though it's still unfolding. But going back a couple of years now, North American trade, in other words, U.S. trade with China, with Canada, U.S. trade with Mexico, has each has topped $300 billion, while U.S.-China trade has fallen to below $270 billion. European trade is already 70% internal. Asian trade, 60% roughly internal. So we've been in this tripolar, tri-regional global economy for some time now. Now, if that figure is decreasing in terms of inter-regional transactions, especially now, it begs the question really as to what degree each region can be self-sufficient. And what steps can be taken in that direction. After all, if we think about the lessons that Asia learned from the 98 crisis and the 2008 crisis, even though, as Rosine pointed out, Asia was less affected by 2008 as is commonly thought, one of the lessons each time included, among other things, certainly bringing down certain trade restrictions and barriers, increasing that intra-regional integration. And that could be one of the benefits in some ways to what happens after this pandemic, because after all, the demand shock is certainly one aspect that is in common between 2008 and now, and that's part of what convinced Asians that they need to open up more to each other, to substitute this global demand shock for each other's demand. And I think there is some potential there. We know that there is a lot of with the RCEP trade agreement, for example, that was agreed last year. There's several $100 billion of gains to trade internally that could be pursued. One of the things more tactically is around travel and tourism, as Rosine mentioned. Now, already we have this incremental reopening going on in Asia. We've got the news showing how Chinese tourists are already back in Vietnam. So we can, for the tourism-dependent economies, this is relatively good news. Thinking about the ways in which Asian countries have been using technology pragmatically around contact tracing, but now how that can translate internationally into these sort of immunity passports or whatever the case may be, could help to jumpstart those regional flows of people, which is obviously critical to many economies. I think we should always remember that the globalization or the form that comes out of a crisis doesn't need to look like the previous one. It can be a new mutation, if you will. And obviously digital globalization has been something that has been undervalued, underestimated, certainly underestimated and underquantified, but now we realize how critical it is. And let's take not only the fact that the share of global trade represented by services had been growing rapidly prior to this crisis. We now know, of course, that the need to have broadband and bring down the price of connectivity, digital connectivity is a premium, but also think about how this elevates, if you will, remote workers and digital work. Just recently, I was in a conversation where some American executives were saying that they don't really plan to rehire the workforce that they had before to come back into the office. And if they want to have software developers, they're going to have them, sort of part-time, if you will. And in assembling a global team of software developers, you don't really have to hire an American in America for $100,000 salary when you can have Indians at 1/3 the price, not to mention other nationalities. Now, within Asia as well, you have Australian universities that are pitching very hard, given their dependence on the inbound Korean, Japanese, and Chinese students, pitching very hard to do remote and distance learning for them as well. So there is going to be a bit more of that digital globalization, both regionally and cross-regionally. Just lastly on supply chains, is that, really the world is moving back to this regional theme towards this make where you sell model. And the make where you sell model, again, was something that was relatively, sort of underway, if you will, as a result of nearshoring temptations, lower energy costs, protectionist measures, other kinds of incentives. But just remember that when it comes to Western firms that want to have a strong presence in Asia, which is growing, of course, they need to obviously still, therefore, make in Asia. And think about how GE has made large new investments in automotive plants in China and Indonesia. It's not going to mothball them. Tesla has its plant and showrooms in China. It's not going to shut that down. Apple has said that it's going to make more components for iPhones and iPads in Vietnam and India. That's an expansion of its presence in Asia. So even if you are, as Japan is, for example, diverting capital out of China, that is still going to benefit other parts of Asia, like Southeast Asia in particular, as it has over the last 10 years. So a decoupling between two still also is followed by a recoupling among others. And that too is a new form or a new dyad of globalization. So I'll just wrap up and sort of conclude on that point, and also just to add that with Belt and Road, for example, which is a key enabler of intra-Asian trade and investment, that's going to obviously evolve as well in a different form perhaps than it did prior, perhaps with less intensity, more multilateralized. But one should fully expect overall those intra-Asian infrastructure investment dynamics to continue, and that should loosen internal barriers further. Thank you.
Very good. Thank you, Parag. That was a magnificent tour of the horizon, a number of points that we'll come back to, both about the plausibility of this vision of a new regionalization, also the issue of supply chains. I've also got quite a number of questions coming in from the audience. So if you have questions for either Razeen, Parag, or Rebecca specifically, or just in general, throw them into the chat and we'll turn to them soon. So Rebecca, you are, in a sense, our representative from the real world. You are now trying to coordinate a response to all of this. So tell us a little bit of how this looks like on the front line of international cooperation at the moment.
Thank you very much, James, for having us. The ministers for trade of APEC just issued a statement yesterday on the need for greater regional cooperation in addressing the pandemic. They talked about keeping markets open. They talked about having more focus on trade facilitation, on looking at inclusive growth in that sense of making sure our SMEs are taken care of, looking at the digital ecosystem as well. So the topics, the subject matters discussed by Razeen and Prasad have already, have gone deeper into those areas that the ministers talked about. But I think going forward, there are lessons that we have learned from this process, that we are learning from this pandemic. And clearly, we cannot come out of it the way we've gone in. Some of the important lessons that we learned or we are learning have to do with trade agreements, investment agreements. This cannot be in its present form. Our traditional trade and investment agreements don't have that element of risk management, as it were, to take on board these developments. So how do we factor in managing pandemics in our trade agreements? In the investment agreements, how do you balance the need for protection with the need for facilitation, the right to regulate? All these elements are new and will take front and center as we go forward. So these are the things, the areas that we need to look at and focus on as we go forward. We are aware of the whole conversation around deglobalization, around the question of protectionism. So how do you manage this going forward? I think that's a very important, more important for us to be looking at. Equally important would be building resilience of our own sectors, specifically manufacturing sector, looking at strengthening our linkages, whether it is connectivity, digital connectivity, whether it is resilience of our supply chains. Another important area that has surfaced also in this is food security and the supply chains that link to food, movement of food, movement of essentials. These are things that we will need to take on board going forward, having learned this lesson. If you recall some years ago, I think 2008, 2009, ASEAN went through a process of having an issue with rice when Vietnam banned the excess export of rice. And we all felt it, and ASEAN very quickly got together to deal with that. So swift action is something that we must be conscious of, and building institutions, making sure our institutions are strong and resilient. In that context, also working with vulnerable economies in the region to see how they can build capacity, build the institutions to enable them to deal with these issues as they are developing. So very importantly, I think, just to quickly end, sustainable recovery. That's swift and sustainable recovery, taking on board inclusiveness of our, especially our vulnerable sectors and vulnerable parts of our economy, whether it's SMEs, whether it's women, whether it's the marginalized. These are things that we must take on board, because these are the sectors that have been very badly affected by the pandemic. So going forward, it's about building our resilience, ensuring swift recovery, which is inclusive and sustainable. I'll stop there.
Very good. Thank you, Rebecca. Thank you, all three of you. That was a terrific overview. So let me start with a kind of basic question, and I'm looking at the questions that have come in. I'm going to draw initially from Rahul Shukla, who asked a sort of basic question about how bad is this really, looking at the data. So we've had Razeen talking a little bit about a fairly gloomy prognosis, but maybe Rebecca, since you were just talking, and Parag, can I just ask for your take on, in a sense, how severe the trade shock that we're in at the moment as you see it? So Ravi asked, are we going to see a W, V, or U-shaped recession, which is a great parlor game, but maybe you could have a go at answering that, or just giving us a sense of how grave the figures are that you see. How big is the crisis that we're in because of this pandemic? Rebecca, you start, and then Parag.
Yeah, definitely we will see a downtrend in exports and imports. And that's the reason. I mean, WTO has revised its growth figures for trade, for global trade. That's why we stress the importance of keeping markets open. Yes, we appreciate the fact that during this period, we need to, to make sure that they're essential. So some economies have put, not quite protectionism. I don't want to go down the route of saying they were being protectionist, but they have put in place some controls and barriers to deal with the present situation, to deal with the crisis at the moment. So what's important is having institutions like APEC, like WTO, to ensure that these measures that you put in place are temporary, are proportionate, all those terms that we use in the WTO, and to ensure that we work together to dismantle them as we go forward in the recovery phase. It's so important. And that's why the statement of the ministers made a lot of sense yesterday. The emphasis on making sure that whatever measures we put in place is temporary and proportionate. And the more important thing is it is transparent. These are the measures that we have to be conscious of if we want to look at recovery.
Parag, I mean, how gloomy are you on the outlook here? Just in terms of how bad this is. Is it an event without precedent in its severity?
Well, what we can measure and quantify, we can certainly relay that. And if the present analysis suggests that trade is going to contract potentially 30% this year, we could see that be potentially less, as a result of the recovery that might be underway, certainly again within regions such as within Europe and within Asia, where there's some, at least positive signals around the reopening of borders and so forth. But let's remember that, given that it is likely to be a W-shaped recovery from a macroeconomic standpoint and market standpoint within each region, whatever the data says at the end of this year, is not necessarily going to be a good forward indicator of what next year holds. It depends on a lot of other factors. But one thing I would emphasize is that when we think about this this notion that the rate of trade growth, or in this case now, given that trade is declining, versus the rate of GDP growth, this has been one of these statistics that people have bandied about to talk about this deglobalization. But let's bear in mind that having a large population that consumes a lot of domestic services is actually part of the reason why the rate of trade growth has been higher, the rate of GDP growth has been higher than the rate of trade growth. And secondly, that's an extremely important, now that is itself such an important resilience factor moving forward. So on the one hand, we've talked about this deglobalization, but the reason it's been happening is also one of the reasons that makes Asian economies, especially large, heavily populous countries, more resilient in the medium term. And I think that's obviously a positive sign.
Razeen, in a sense, we heard from you your view of how bad this was going to be. So let me move the conversation on to this question of decoupling. I mean, when we're talking about deglobalization, a lot of this comes down to the relationship between the industrial countries and China. That was a big driver of the globalization that we've seen. And so coming out of this crisis, there's a thought abroad that in all sorts of different ways, countries like Japan, countries in Europe, North America are going to begin to unpick the supply chains that they've snaked through Asia and particularly in China. Now, Parag has given us a view on this, and I'll turn back to him in a minute. But I suppose I wanted to ask you, how plausible is this vision? Is it now possible to imagine a world in which you suddenly hoik all of these supply chains out of China, firstly in things like medical equipment and then in a whole host of other areas? Or is this really unrealistic given the extent of the integration that we have?
I think the simple answer is the latter. Decoupling is a misleading term. Even with the current shock, it's unlikely to happen in a headline sense. So I think we've got to look for something that's more nuanced, differentiated, while still looking for significant changes from what we've seen in the past. And I think the way I would look at it is the following. We're going to see an acceleration of shifts that have already been taking place. And I think that's a mantra I would have across the board, not just for global supply chains. So just as companies were thinking of relocating some production out of China on cost grounds, because China is going into more value added, because of technology changes, those things will be accelerated. Of course, that doesn't mean the whole supply chain is going to go out of China, but parts of it will go to other countries. Vietnam in the front rank in consumer electronics, for example. We'll see perhaps more of a regionalization phenomenon, a bit more of an onshoring phenomenon, though I wouldn't exaggerate. I think there are limits to onshoring back to the West. I think the big change for me is political risk. Here I think my take on the regionalization phenomenon in Asia is perhaps a little more pessimistic than Parag's. I think what we're seeing as a result of this pandemic, on the part of Western multinationals in particular, is that China is now a much bigger political risk. And one has to hedge against that. Now, that was already happening to an extent with the US-China trade war, but I think what is happening now goes much deeper than that. We're seeing, in my view, Chinese policy and politics going in the wrong direction. It's not going to be particularly business-friendly for Western companies in particular. There's always the danger of retaliation in the pipeline coming from the West and elsewhere. So for those reasons, I think companies are going to relocate more production out of China, while at the same time not being willing or able to go lock, stock, and barrel out of China. I think the broader context for this is, unfortunately, if I'm going to speculate, the emergence of a more malign mercantilism than we've seen in the past. So as a result of interventions in this crisis, a recalibration of state and market, more industrial policy, more spillover of domestic interventions into external protection, less strength in international organizations like the WTO. We're going to see more protectionism around the world, and not just the West versus China, but also inside regions, and I suspect inside Asia as well, which is why I'm not as optimistic as Parag is about some kind of resurgence of trade and globalization within Asia and within supply chains linking China and the neighborhood and beyond, as it were.
So let me turn to Parag in just a second. One of our questions from the audience was from Abhishek Ranjan, and he said, can we think of a world in which we are, in a sense, free of Chinese products? And just to be clear, I take it that you're saying that this isn't a very plausible world vision, that we are, the economies of the West, of countries like Singapore, is simply too intertwined with the Chinese economy that even something like this pandemic is not going to lead to full or even partial decoupling.
I think it's a question that really has to be answered sector by sector, in terms of, decoupling. I mean, China itself, of course, has tried to diminish, obviously, and very successfully in quite a few sectors, its dependency on its import dependency for exports. Certainly in electronics, it now has a fully fledged sort of indigenous semiconductor vertical as well. Now, again, going back to make where you sell, as I mentioned, whether it's automotive, semiconductors, and so forth, they've all said that, even despite the Trump administration rolling out this, Alliance for Economic Prosperity or whatever it's called, those companies have said they're going to continue to make in China what they sell in China. Now, when it comes to a broader set of consumer goods or other areas where China is strong, you can see that there is competition in those areas. India can make appliances as well. Of course, now India can make mobile handsets too. We saw the garment industry shift to a large extent, or accelerate a shift out of China into Bangladesh. And so forth. So just as China has practiced import substitution, other countries can also move up and across the value chain in different areas and compete with China, obviously internationally in the export market. But also bring in the role of technology here, because automation and the investments that firms are making in labor automation, which will most certainly accelerate in the wake of the pandemic, given the difficulties that employers have had with the labor force, sick workers, closed factories, and so forth. That is going to change the landscape to some degree of competition, because you will have enhanced productivity coming out of the automobile factories of Korea and Japan, as they use 3D printing and robotics to do their own automobile parts and diminish the imports from specifically Wuhan, in fact, among other cities in China. They will be able to be more productive and in terms of their output of automobiles. So this is the kind of question that has to answer sector by sector. Maybe it would be a good thing if each country made its sufficient domestic stock of surgical masks and other kinds of critical, medical equipment and so forth. So the distribution of these things in a competition for the global market for them is not necessarily a bad thing. And yes, that actually means in some areas somewhat less dependency. And just one point to respond to Razin, it's more of just an open question, which is just that we'll wait and see what happens. But as we all know, China was in its effort at sort of what I call sort of permanent substitution of any dependence on technology imports from the United States in particular, or certainly non-friendly countries in general. China had been willing to push very close to an aggregate trade deficit. It was reducing tariffs across the board on every country except the United States. And so in a way, let's remember that in terms of political risk and its diplomatic overtures right now, in order to sort of play nice, one of the things it may need to do is to continue in that vein and to buy, lots of goods and exports from other countries. Again, that's more of a just, let's wait and see, but that will certainly show up in some way, shape, or form in the trade data moving forward.
Can I just add that in an environment like this, it is where like-minded countries, it's so important that, yes, if you want, there's US and there's China and the global the geopolitics that's going on that's affecting trade, but we also need to look at what other smaller economies are doing in the context of ensuring that markets stay open. So, for example, what Singapore, New Zealand have championed, whether at the WTO and getting to an agreement to make sure that markets are open. I think that's an important note in the context of building coalitions, building, alignment along countries or economies that have that are open and dependent on trade. So, what they've championed, I think it's so important that there is traction in this so that the vulnerable economies are not, affected so much by this tension that's going on. They are part of the system, and it's so important to ensure that when we talk of trade and global trade and investment, that we talk about it in terms of sustainability and inclusiveness. You talk of malign, the phrase that you use, Razil. I want it to be more benign so that all of us, especially the smaller economies, benefit from this.
Rebecca, could you also, one of the questions underlying this is about the regional and global response. So I've had a couple of questions. I want to ask about the WTO in a minute and the role of the WTO, but a couple of questions on the chat about, in a sense, why hasn't there been more global coordination on the trade front? So after the global financial crisis, we saw the G20 coming together and committing not to introduce tariffs, various measures that were taken. How do you judge the international response so far, and what more are you looking to see happen?
I think this started, APEC has, as I said, we have started the process of ensuring that we track the measures that are put in place. We appreciate that economies have to put in place some measures to deal with the pandemic, but these have to be, you have to make sure that they are, temporary, and make sure there's transparency in this process. So that's part of what's being done at APEC. Maybe you don't see it in so many words, but definitely when we track what's being done across the region, we know that there is policy response, not just in terms of stimulus and ensuring relief, but also more globally, more regionally, to look at these measures and ensure that we talk to each other. I think APEC in that sense provides that opportunity for us, that because we are non-binding, unlike the WTO or ASEAN, to have that conversation about how we can then look to ensure that these measures, while necessary, are temporary. There's always that danger when you put a subsidy in, it's very difficult to take it out. But having that conversation is so important. And I think going forward, as I said, when we look at all our agreements, we have to ensure that there is this element of dealing with resilience. Of Eugene Young has also, asked, can we not include a whole chapter on helping, ensuring that trade agreements facilitate, these issues when they arise, these challenges when they arise.
Razin, what about the role of the World Trade Organization in this? There was a speech this morning from a prominent US senator calling for it to be scrapped. We had a couple of questions, one from Ravi, one from Rachel Lim, both asking basically the same thing, which is, does the WTO have any relevance in trying to coordinate a trade response in this area?
The liberal answer, even the social democratic answer, is that it should. But unfortunately, it's been sidelined. This is part of a bigger trend. What we've seen, at least since the GFC, as part of a pendular shift, from market to state, if you like, has been more protectionism, less room for international cooperation, and more going it alone by the major powers. And the WTO has really been squeezed in that process. And it wasn't able to contain the kind of new protectionism we saw triggered by President Trump starting just over a couple of years ago, even though the rules and some of the mechanisms are there to try and contain that phenomenon. Just as it's not really in a position to contain the new protectionism emerging with this pandemic, and I suspect it's not in a good position to contain the even greater protectionism that's in the pipeline, much of which I think is going to result from the new industrial policies spilling over into controls on the flow of goods and services and investment across borders. Things like subsidies, ownership controls on foreign companies, procurement policies, and other things besides. So I think the short answer is that international institutions, starting with the one at the center, the WTO, are not in good shape to contain the kinds of things that are emerging. The silver lining is, to me, actually, I'd like to echo what Dr. Rebecca just said. I think the real lessons coming out of the pandemic so far, and it's still perhaps early days, are not those coming from the big powers, from the United States, from the European Union, and certainly not from China. It's the lessons coming from small, medium-sized, open economies in East Asia, all the way down to Australia and New Zealand, beginning with the public health response. So the best practice examples have come so far from South Korea, Taiwan, Hong Kong, Australia, New Zealand, Singapore, with the exception of the migrant worker issue. And let's not forget, these are also some of the most open economies in the world. They're the ones, and some of them who are members of the CPTPP. They're the ones who are talking about keeping economies open and finding creative solutions to contain the new protectionism, beginning with plurilateral initiatives, like these new immunity passports. So I would like to see that kind of coalition of the willing expanded to other like-minded countries. And it's the small, medium-sized open economies who I think grasp this issue best of all, not only within Asia, but in other regions as well. I think it would be a very helpful counterbalance to the bad things, geopolitically, economically, on trade, coming from the big powers, though on its own probably not sufficient to restore the world to the kind of liberal internationalism that we've had since 1945, and to, if you like, fully negate the malign mercantilism that's accelerating.
Very good. Let's in a sense take a cue from what Rosine was saying about the smaller, open, trade-dependent economies in this part of the world. I've got a whole bunch of questions about what this means for Southeast Asia and ASEAN. To pick a couple, Jeremy Grant, and I think this is the Jeremy Grant who used to be the Financial Times correspondent here in Singapore. What will the aftermath of COVID-19 mean for China's strategic, economic, and financial engagement with Southeast Asia? A general, nearly a dozen questions on that basic topic about ASEAN and Southeast Asia. So, Parag, let me turn to you. In a sense, the regionalization that you're talking about suggests that Southeast Asia and China are going to integrate much more with one another, and that some might interpret this as a kind of new sinosphere. How do you see this developing over the coming period?
I think that's a great question, but it's might be overstated in terms of the sort of conclusion that we might be tempted to draw from it. The fact that China is now trading more with ASEAN, if I'm not mistaken, China does trade now more with ASEAN than the United States, does in itself, underscore a point about a growing regionalism. Regionalism in terms of the volume or intensity of trade activity doesn't necessarily speak to the structure geopolitically, whether or not it is a deeper or more hierarchical relationship than before, or whether in fact Southeast Asian countries are taking certain steps to protect themselves in a way from being overly Sino-dependent. One can have greater trade with China, but also greater trade with India and with North America and South America all at the same time, potentially. So it doesn't in itself lead us to any particular conclusion. Let's bear in mind also that one of the things that was happening prior to the pandemic is that China had begun a pretty massive reallocation of Belt and Road, sort of outbound capital, away from the far-flung regions of the world, like South America and Africa, and focusing much more on its immediate periphery, again, to the benefit of Southeast Asia to some degree in terms of the volumes of investment and lending as well. Now, obviously, there has been and will continue to be some pushback, write-downs, restructuring of loans and debt related to BRI projects in Southeast Asia. But on the whole, the fact that in the context of RCEP, companies setting up and those that exist in Southeast Asia can actually now re-export or export into China is certainly beneficial to them. So that Sino-dependency is not a bad thing, to the extent that countries may actually be trying very hard and may succeed, some of them, in reducing their trade deficit with China. I'll make a final point about again, Asian regionalism more broadly. It relates to capital markets, because we can't really talk about globalization and only focus on trade. To some extent, one could say that trade is billions and finance is trillions. So we really should be talking about this as well. And again, some of the lessons from past crises, and certainly some of the opportunities to get to this issue of silver linings, is around capital markets, because clearly with a world that is looking for returns, looking for yield, Asian countries offer this opportunity. If you look at the MSCI Asia Index, Asian equity markets, they're sort of tepidly rallying, but they've certainly bounced back a lot more than the broader emerging market asset class. So we should certainly differentiate Asia as an aggregate from this broader global category of emerging markets that includes the sort of wayward countries like Turkey and Argentina and so forth. And so not only are these Asian markets rebounding, but with weaker currencies, these constitute a buying opportunity. And indeed, that's what many people and market analysts are saying. And also then there's the opportunity for privatization. Given the huge outlays fiscally that governments have to make, they don't want to have their deficits widen to such an extent that it becomes, sort of damaging for their sovereign credit rating. Rather, this is an opportunity to reform and to open up a bit more and privatize or allow for greater floating of shares, bring in more of that foreign capital that's been sucked out of the region as the result of the pandemic. So something about the possibilities there at the intersection of privatization, weaker currencies, capital account liberalization, and the global search for yield spells actually a positive opportunity for Southeast Asia relative to other regions moving forward. And by the way, China has been trying to play that game. Let's remember that China has been seeking to liberalize its capital account, to bring in foreign capital into its equity markets. And in fact, one of the big themes in the US Congress right now is the attempt to restrict American pensions funds from buying into those assets. But many global asset managers and institutional investors most certainly will. And that's copying on what Japan did decades ago, what Korea did decades ago, and the weaker or the second tier of Asian markets will also want to do.
Just a quick follow-up question. So I had a question from Dennis, which was saying, what about very small states, city-states like Singapore? You've always been a city-state bull. Do you still, in a sense, think that the future belongs to these small city-states? And then I'll ask Rebecca about ASEAN diversification.
Well, to say that the entire future belongs to them would be a fairly bold claim. But I think that in the spirit of what Rosine very rightly pointed out, you have Asia as very competent and medium-sized or small-sized countries that have fared well despite their openness and vulnerability. Competence is key. And one of the things that we have had no reason really to talk about in this conversation is migration, because for the first time in history, we've artificially reduced international migration to exactly zero. However, looking ahead 6 months, 1 year, whenever there is a vaccine, we will you see people voting with their feet and hoping to relocate from the red zones that managed this crisis very poorly to the green zones that did well. And people will move with their not only themselves, with their families, with their money, and seek to re-domicile themselves in places that are more more pleasant if you're going to be quarantined at some point in the future for reasons beyond your control. So do I think that, again, does this experience raise the appeal of countries like Singapore, countries like New Zealand? Of course it does. The question really is about not on the supply side of people who would love to live in these places, but on the demand side. To what extent will these governments let them in? And I think that's going to be something that's very, very interesting to watch.
Very good. Well, you answered another question we had. We had a few questions about immigration. So, Rebecca, can I just go back to the Parag and Rosine both touched on this, the question of diversification within ASEAN. We talk a lot about a country like America trying to diversify its supply chains, but does APEC, or do you have a view on, in a sense, the geometry of trade relations within Southeast Asia? Should other countries in the region also seek to become more diversified relative to China or the United States or whoever it might be?
I think there's enough effort being made to ensure that not just about diversification, but more integration in the region. And ASEAN has done, I think, I'm a fan of ASEAN, and I think ASEAN has done well, in expanding its sphere, whether it's especially including India and China into this big forum that we had. Although it's about trying to persuade India that this is a proposition worth their while, but having RCEP in place, and hopefully it will get done by end of the year, would be really good for the region. If you're looking at how trade facilitative it is, if you look at the details of RCEP as an agreement, there is a lot to be said for it. A lot has been done by ASEAN in leading this process to ensure that the elements that are in this agreement will take us to a stage of further, deeper economic integration for the region. Now, moving away from that and coming back to APEC, the work, I referenced this before, the work that New Zealand and Singapore together with Brunei and a few others, Canada, Chile, have done to put in place, to set in motion this whole trade facilitation, keeping markets open mantra, especially for essentials, for medical goods, for food, for agricultural products. These are areas which we've seen, which have provided lessons for us. And to see these economies taking this one step further and championing it, they are not the giants in the global economy by any means, but to see that they pulled together and moved this initiative forward, and then now working to champion it in APEC and getting APEC economies in. I think it's an important step in the right direction. APEC has been able to do this in the past. If you look at what we've done with environmental goods, we championed it in APEC, and then we elevated it and made it multilateralized, right, at the WTO. So we're seeing that these are this very important area of medical devices, of medical products, essential commodities and goods. Just as we've done in the past, we should be able to pull together to get this done going forward.
Very good. Thank you so much for those of you who are watching. I know that there are many hundreds of you here, and we've had almost 100 questions. I'm not going to get through all of them, but let me rattle through a few more. So one of our former students, Ravi Shankar Jha from India, he asked a very simple question about the political implications of the crisis, Rosine, and I think that gives us an opportunity to go back to your tantalizing conclusion at the beginning of this and begin to kind of look forward to how policymakers might respond. You were about to tell us how you thought that perhaps policymakers would make some mistakes. I wonder if we could go back to that and get you to tell us a little bit about the mistakes that might be made.
Well, in very, very broad terms, and here where it's a medium-term outlook, I think the kind of trends we've seen since the GFC are likely to accelerate. So the first one, and I'll just go through this in very quick order, a further move towards more state intervention and more restricted markets. Of course, we're seeing that with crisis interventions. Some of them will be removed, but some of them, particularly those that have entitlement potential, will stick. And some of that will be negative. So I think the kind of capitalism we're going to see coming out of this crisis will be different in some respects. Second point, part of that will be a legacy on a combination of industrial policy and trade. Trade protectionism, which is going to be difficult to contain. We've talked about the reorientation of supply chains, what that might mean for the WTO, for example. I think also geopolitics is important to bring into the picture, because I think an environment of more contested and unstable geopolitics revolving around big power competition is also going to squeeze great trade and globalization. So let's put it this way. I think trade and globalization is going to be squeezed into the medium term through a combination of some negative aspects of domestic capitalism and negative geopolitics, all pointing to a more malign mercantilism. So for the liberal-minded, the open economy-minded policymaker, whether he or she be, shall we say, more free market-oriented or more social democratic-oriented, the challenges are going to be very, very, very stark. And all the more reason, I think, to think of the kinds of creative coalitions of the willing that Dr. Rebecca alluded to earlier.
Parag, I mean, what do you think the world's political leaders are going to take out of this? Is there going to be a movement not for more openness, but to defend the openness that we've had? Or is it inevitable in a sense that you're going to get what Rosine talked about, a new age of mercantilism or a retreat into forms of populism and looking after your own people after a moment like this with its effect on globalization?
It could be a bit of both, but no doubt done in one's own interests. So, for example, the stimulus, we haven't really seen a globally coordinated stimulus as much as we've seen a simultaneous stimulus. And those are obviously slightly different things. Governments are pushing to jumpstart their own economies, not for the purpose of boosting imports from others, obviously. Some of the measures that we've seen also, even from countries like, or entities like the European Union, that's always pushing to maintain a free and open, rules-based international system, is the push to strengthen their own strategic industries. And this is a whole initiative that the European Union has launched, again, pre-pandemic, in order to fend off to some degree some of the mercantilistic practices. Certainly the investment restrictions that have been passed and legislated in the United States and actively implemented there, in Europe as well, particularly in Germany, Australia, India just 2 weeks ago, barring any, sort of onshore Chinese beneficial owner from having a majority stake in a wide range of assets in India. So there's going to be this, push and pull, if you will. But to some degree, so again, you have this coexistence of the industrial policy and the mercantilism with the desire to have the most lucrative markets continue to open. So I think that the in particular the U.S.-China trade war has gotten more attention, but ultimately it could be EU pressure on China for reciprocity that could have a lasting impact on how China decides to move forward in terms of market access there.
Very good. We're racing up against time here, but let me ask one question to Rebecca, and then I want to conclude by getting you all to give us a note of optimism for the future. But Rebecca, we've had a range of questions. Ying Hui Ting, for one, talking about RCEP, a couple about TPP. In a sense, is it realistic to hope that there will be more and better trade agreements coming out of this? I mean, you've talked about new kinds of trade agreements which cope with pandemics. But your free trade area of the Asia Pacific that APEC is always very keen on. In a sense, have we seen the end of these big multilateral or regional agreements, or is it plausible that we might see a resurgence of them after this?
I think we're going to have to take a step back and relook trade agreements going forward. Not just the trade agreements, as I said, but also investment agreements. If nothing else, we've learned that this pandemic the impact this can have on both trade and investment. The questions around the investment decisions, the changes that are being made in investment environments, those and infrastructure, those things will have to be dealt with going forward. Those lessons that we've learned this last few months cannot be just diminished like that. You have to take those on board and to see how we come out stronger with better trade agreements that are, you have to change the narrative. Otherwise, folks will go back to this whole argument about deglobalization. For me, it's not about focusing on aspects of deglobalization, but really, how do we improve on what we have now? Clearly, the free trade agreement for the Asia Pacific that we were envisioning, the free trade area of the Asia Pacific that we were envisioning, cannot be in this present mode. You've got to bring on board the issues of risk management, of balancing national and domestic wants and needs with regional benefits that will accrue from these agreements. So there's a lot that we have learned, and it's a matter of putting them into place and having those conversations. And for me, APEC provides that opportunity for us to have those conversations. Maybe you can't do as much in the WTO, almost 170 economies. ASEAN, the binding aspect of ASEAN causes economies to posture more than anything else sometimes. So APEC provides it's non-binding. So you're free to have those conversations about the changing narratives for trade and investment agreements going forward.
And just let me ask each of you, Rebecca, you were just speaking, so we're about to conclude. We said we'd finish at 6:15 Singapore time, and we're going to maybe go 1 minute over. But Rebecca, give us an optimistic thought to end. This can be quite a challenging moment. I don't want to say that we've been gloomy, but give us something to look forward to. What's the silver lining to come out of this?
I think the fact that all of us agree that we need to look at our measures that we put in place. There is agreement, especially with the minister's statement, to say that we want to make sure that we continue to keep our markets open and to look at it from a facilitative perspective, rather than building those walls, that prevent us from expanding our trade and investment. And more importantly, how all the initiatives that we put in place will benefit the vulnerable economies, the smaller economies, and the vulnerable parts of society.
Parag, what's you've given us a few sort of silver linings already, but give us a reason for optimism at the end of this conversation about why trade and globalization will emerge stronger from this crisis.
Sure. Well, I can, sort of focus, I think, on this region primarily for our intents and purposes right now, which is that, we've realized, obviously, is to appreciate small, relatively open economies, how dependent we are on that connectivity, on globalization, on travel and tourism, and so forth. So the utmost efforts are being made to restore that, and I think that's positive. Again, that sort of will linger in the mind, how important it is to preserve that. The other is a new wave of investments that can be made and should be made, again, in digitization, in 5G, mobile broadband, obviously in health technology, distributed cost, lower but distributed cost of care for critical healthcare interventions. Obviously, agricultural technology, the need to have food security and resilience is also something that's been demonstrated in this crisis. So greater investments in agricultural productivity, potentially more, rural finance for farmers and so forth. So boosting food output. All of these things then become, tradable goods and services. And hopefully then there's going to be some, a substantial amount of spillover effects within the region. So I do see a pathway, a scenario, chain reaction that could be relatively positive for this region. We can't control what happens in the rest of the world. We don't know when the US-Canada border will open. We don't know when the Schengen Agreement will be back in effect, but we can hopefully influence what happens here in this region in the right direction.
Razin, final word to you again from the home team at the Lee Kuan Yew School. Give us a silver lining to close.
So James, I thought I'd given you all the optimism I'd got in my system, but since you insist on extracting the final drop, let me have a go. I'm not optimistic about things top down, not with a combination of Donald Trump, Ursula von der Leyen, Boris Johnson, Emmanuel Macron, and not least Xi Jinping. But I'm perhaps a little bit more optimistic about things that emerge bottom up, from small and medium-sized countries, from cities, something Parag talks a lot about, doing innovative experiments, from subnational regions, and from companies, entrepreneurs, and individuals who do things in all sorts of innovative ways, experimenting along. For that, they need some kind of enabling space. And that space might constrict. That's what worries me.
Very good. All right. Thank you very much to all of you. So this is the third in the series of events from debates from the Lee Kuan Yew School. The fourth one is coming up in about a week's time. We're going to look at climate and the knock-on effect of climate, biodiversity, and a number of other similar issues from the crisis. But thank you very much to our sponsors, the part of the Hong Sing Chewing lecture series, and in particular to my three speakers, Razeen, Parag, and Rebecca. Thank you very much for your time this evening, and thank you to all of you for watching. Good night.